All right. So today we are just going to learn more about basics of stock market. All right. And after that, in tomorrow's session, we are going to touch in topics like price action, then trend lines and patterns, impulse move and correction. For today, we are going to learn what is stock market, difference between trading versus investment, technical versus fundamental, buying and selling, then regulations. Okay, and then we are going to learn about who are the participants in this stock trading. Okay, then we will come around bulls versus bear, long short, intraday, swing trading, delivery, what is stop loss, targets, and who are the brokers, and the momentum. Okay, and then we will see what are stock charts and how we look to the stock charts. Okay, and then the most important part will be candlestick patterns. Okay, so if not, take a book and a pen, or if you have a mobile phone, just types all the things, important things I will tell you, and note it down. Okay, then time frames and swing high, swing lows, and last we will learn about support and resistance. So this session will not be that long. So tomorrow we will stretch a little bit, around 2 to 3 hours, but today it will be just a basics. Okay, so let's start. So what is stock market? So a place where you can buy and sell shares of a publicly listed company. So if you guys know, and if you are around stock trading or stock market, so you know simply that you can buy and sell shares of a listed company from NSE or BSE. So if you are a Indian trader, you can buy through NSE or a BSE markets. Okay, so for example, Reliance Industries are listed in NSE and on BSE too. So you can buy those shares, company shares, and hold it for a long time. Okay, so why stock market? So if you know, stock market gives you higher returns than FDs or banks. Even last time I read an article, the government has decreased the interest rate of a bank to, I guess, 5% or 3%. So for a few banks, like private banks, are giving 4 to 5% returns per annum. Okay, and if you see, people use stock market for wealth creation. So in the past, people were not familiar with stock market, only few know about stock market, and those few have made a lot of money by investing in the stock market. Okay, for example, Rakesh Junjunwala bought Titan share at around 10 rupees price. Okay, so if you see now, Titan shares is around 1000 rupees. Okay, so yeah, wealth creation. If you are an intraday trader, you can also make easily around 5 to 10% return per your investment. Okay, but it's not that easy. All right, so you have to put that much effort to make that kind of return in intraday trading also. All right, but if you want to play safe, if you are expecting a 20 to 30% return on an investment on a long term, so just buy that shares on a fundamental basis or a technical basis, and just forget about it. Okay, and obviously it's a passive income. So few people don't want to be a full-time trader, so they basically just invest in the stock market. Like if they get any news for Reliance or a Tata Motors stock, so they start investing in that stock, okay, for short term or for a long term, based on how much return they are expecting from that stock. Okay, and then obviously, what is trading and what is investment? So trading is basically you are buying and selling stock, or the same day, or you are just holding it for few weeks or for a month. Okay, so that's basically a trading. Even investing is a kind of trading, because you are buying and selling share for a long term. In future, if you are not going to exit, it's on you. But yeah, so income is short term. So and we use technical analysis for trading. Also we use fundamental analysis, like if a company is posting its few results. All right, so yeah, that's a kind of fundamental technical analysis. For example, Maruti Suzuki is posting a result tomorrow, and we are expecting a good result from Maruti Suzuki. So it's not guaranteed that a good result will lead the stock to go up. Okay, so it doesn't happen like that. So basically, if you see any result of a stock, that's a quarterly result. Okay, so 6 month results, there are 1 year results. So the stock will move for the over the period of time, not for that day. Okay, so basically people think that if the stock is posting a result, so that stock will fall or rise more than 10 or 20%. It doesn't work like that. It take times to go. It take times for investor to invest and push the stock much higher. Okay, so the promoters also buy the stocks during that period of time. All right. And yeah, technical in trading you get leverage around 10 to 20x. So last I guess on Feb or March, they decreased the leverage for intraday trading. So now you only get 9 to 10x on your investment. So that's fine, because we are not going to leverage our positions, because the more leverage you take, the more over trading you will do. Okay, so we will try to trade with minimum leverage we can, and mostly we will try to trade with only our capital, not with extra cash. Okay. And yeah, investment, obviously wealth creation. You are thinking for a long term perspective for that particular stocks, and obviously you won't get any leverage for investing. You have to invest your own money for investment. All right. And yeah, fundamental analysis versus technical analysis. So what is fundamental analysis? Fundamental analysis is basically company finance. So if you are familiar with what is PE ratios and all those stuff, so the CA people knows all this fundamental analysis about all the stocks or the companies. Okay, and fundamental analysis we generally do because we have a long-term perspective for the stocks. Okay, and obviously financial background people knows about fundamental analysis. They can read the chart sheet of the company. All right. And technical analysis, basically we are going to focus more on technical analysis rather than fundamental analysis, because we are going to trade, not invest. All right, obviously you can invest using technical analysis, but fundamental analysis is just that you get another confirmation for that stock to hold. Okay, so yeah, in technical analysis we do chart analysis, and obviously technical analysis we are going to trade, so it's a short term trading, and obviously we are going to use price action. And obviously anybody can learn technical analysis, even fundamental analysis anybody can learn, but it's a kind of complicated chapter. So what is buying and short selling stock? So buying is same like you're buying something and you're holding it for something. For example, you want to buy Reliance shares, you are going to just place a buy order on Reliance and hold it for short term or a long term, and expecting that stock price to rise in future. Okay. And short selling is mostly you can do in intraday only, because you have to borrow shares from the brokers. All right. And if you want to short sell and hold it for much longer period of time, you have to buy an options or a futures contract. Then only you can short a share and hold it for a week or month. Okay, depend on the expiry. All right. So yeah, for example, I will show you. Array? Okay, caps lock is on. All right. So you can buy shares like this. Okay, so this is a Zerodha broking platform. If you are not familiar with, Zerodha Kite provide you to buy and sell stocks through the online platform. Okay, so yeah, so this is M&M shares. So if you want to buy, if you will simply click on buy. So during uh, intraday trading, I generally use intraday MIS order. And if you want to hold that share for investment purpose, so there is an option called long term CNC, cash and carry we call it. Okay. And sorry, and there is an option called cover order. So basically MIS and cover order gives you both gives equal margin around 10 to 9x only. But here you can place the price and the stop loss. Okay, so if I want to buy M&M at 800 and my stop loss is around 795, okay, and I will buy. All right, so market is closed now, so that's why it's showing this. Okay, in MIS order, you can place both target orders and stop loss orders. So I am going to buy 100 quantities in M&M at price of 800 rupees. I will place a buy order. So once the position got executed, I will simply click on exit, and I will place my stop loss and I will place my target. So in cover order, you can't place the targets. You have to exit through the market orders. Okay, so that's why I use MIS, and MIS doesn't gives that much of leverage. So that's why you have to trade only with the capital you have. Okay, it gives you around 9 to 10x of the margin. All right, so so in short selling, we are expecting that the stock will fall in the future. Okay, borrowing a stock and then selling it. So we borrow stocks from the broker, and then will sell them on a much lower price to the buyers who are going to buy. Okay, and yes, if you are using an angel broking platform or any premium brokers like angel broking, Motilal Oswal and all those, so don't do a mistake of shorting the stock. Wait a minute. Don't do a mistake of shorting a stock and then holding it. Okay, so uh, they borrow if in in the end you are borrowing the stock from the broker. Okay, so if the price doesn't come to your target price, they are going to automatically square off your position and then deduct that amount from your bank. Okay, so if you are thinking of shorting a stock, do it on an intraday or just use futures or options for that particular script. Okay, so this is M&M April futures contract. So in futures contract, you will get a predetermined lot size. So in M&M, it is 1400 shares. So different stock has different lot size. Okay, so yeah, if you want to short that stock, just simply press this toggle button, and this is how a sell look like. And you can sell a future contract and you can hold. But if even if you want to sell a future contract, you have to do it with a normal order. All right. Okay. So the participants, so do you guys know who are FIs and DIs? Anybody? Have you heard about FIs and DIs? Without reading the PPT, do you guys know what FIs and DIs do? There are actually three participants in the market. You can type on the chat box if you want, or you can turn on your mic to say. HNIs are basically those only. The HNIs are basically the one who has capital more than 20 to 25 lakhs. Okay, those are the people with huge capitals. If you have 30 lakhs of portfolio, you are HNI. Not a registered one, but an HNI. If you have portfolio about 20 or 30 lakhs, you are basically an HNI, emerging HNI, you can say. Okay, so the FIs first. FIs are basically foreign institutional investors. Those are basically investment banks and hedge funds. Okay, these people have huge capital. Okay, like billions of dollars they have. Even DIs do the same work, but those are domestic institutional investors. If you are staying in India, so all the LICs or mutual funds or banks are the DIs for you. And if you are staying in US, all the FIs there, all the institutional investors are basically DIs for you, and we Indians will be FIs for you. Okay, if you use Money Control app, if you are using your phone right now, open Money Control app. I will show you how you can see FIs and DIs data. All right. Have you guys opened the money control app? Please type yes. Yeah, sure. I need a yes from each and every one of you. Dinesh has done, Sagan has done. Waiting for Vinayak and Mit. What about you, Vinayak? Vinayak, you there? Vinayak, Vinayak, Vinayak. All right. So on the left side corner, do you see three lines? Okay, click on that, and in portfolios and my watch list settings, scroll down, and in the market section you will see FIs, DIs and MF activities. Okay, click on that. Done. So once done, you will see all the FIs and DIs activities during the market. Okay, so this thing doesn't update during the live market. It is after market reports. Okay, so on Thursday, so FIs bought around 149 crores of uh, in 149 crores in cash, and CM is basically cash. So DI sold around 296 crores worth of stocks, and index futures. So FIS has bought 400 crores of futures contract, and also bought index futures, sorry, in index option they have bought 4500 crores of options contract. So if you see, they have a huge stake in the index option on that day. All right, so this is how you can watch FIs and DIs data on the money control app. Okay, so any doubt regarding to who are the FIs and who are the DIs? And basically, we are just the retail traders. All right. So FIs and DIs are the institutional traders. They have the huge capital to trade, and basically they can move the market with huge volumes. All right. And we retailers, yeah, some of us have capitals like 10 crores, 20 crores, 100 crores, but those are just negligible in front of institutional traders. All right. So any doubt regarding to FIs and DIs? And retail traders are traders like us who trades in the market daily. All right. So we are just a contributor for them, nothing else. And we are going to, in future sessions, we are going to learn how to trade with institutions. All right. So should I move further? All right. Cool. So commonly used terminology. All right. So do you guys know what are bears and what are bulls? Any idea? Bulls and bears. If you know bull market or a bear market, or if you have seen the scam 1992, Harshad Mehta was a big bull. Do you guys know what are bulls and bears? Come on, guys, answer. Okay, market up is equal to bull, right? A market down is equal to bear. Okay, so basically those there is a concept behind this. So if you see a bull, if he attacks like this, like he goes from down to up, and he just swing his enemy to the upside. And bears basically attacks like this, they just put their claws to the predator and smash that down. Okay, so bulls and bears, those are not just animals, or these are not just random terms. These are the basic example, like bulls lower their head and throw enemy up into the air, and bear stand and come down crashing on an enemy. Okay, so yeah, if you see a market going up, that means the market is in a bull trend, and if you see a market going down, that means a market is in a bad trend. Okay, and long and short we just discussed on a previous side. What is long? Buying of a stock. And what is short or short selling? That means selling of a stock. All right. Okay, so intraday trading involves entering and exiting a trade within the same day, compulsory. Okay, so discount brokers are, they execute your positions around 3:20 or 3:15 only. Okay, so if you are not physically uh, exiting your position, their broker do it for you, but they charge around, I know Zerodha charges 50 rupees for executing your shares. Okay, so if you don't want to execute by your own, the broker will do it for you, but they will charge 50 rupees. All right, and swing trading involves carrying a trade for a few days or weeks, as opposed to the intraday trading. So swing trading is basically you are holding stock for a few weeks or a month to come at to your target price, and then you will exit. So swing trading involves just your capital, and intraday trading involves also a capital and leverage. All right, moving next. What is delivery? So delivery is basically same like swing trading, but when you take delivery of a stock, you are purchasing it with a long term perspective. Okay, and not for a short term intraday trading purpose. All right, even investment is like a short term trading, because you are expecting the stock to go at a particular price and then you will exit. But if you are investing in a particular stock, you are basically expecting that it the company will go much higher and higher and higher in the future, just like Reliance. So Reliance is a good stock for investment, because it has a strong fundamental. Okay, and what are stop losses? Do you guys know what is stop loss and why it is important for both swing trading, delivery, and intraday trading? So just looking at this name, what do you think, what are the stop losses? Okay, anybody else? Meet Jagan Vinayak, sorry, Dinesh, Jagan Vinayak. You guys know what are stop losses, because we are going to use a lot of it. That's why. So, stop loss is what we place in every trade as an insurance to protect us if the trade goes against us. Okay, if the price hit our stop loss, we will exit. So, basically, for example, you are buying an XYZ share at rupees 100, and you are expecting it to go around rupees 205. Sorry, 105, 5 point moves. And but what if your trade goes against you? Obviously, if you don't place a stop loss, it will continue go down until it uh, capitalize your whole capital. Okay, if you don't put your stop loss, it will just wipe out all your entire demat account. All right, that's why we are going to use a risk reward ratio of 1 is to 3. That means I will risk 1 rupees again a 3 rupees gain. All right, stop loss are basically that we are going to protect our capital for making a huge loss. All right, and yeah, we are always going to use a stop loss. Without a stop loss, you are not going to take any trade. If you don't have a determined stop loss, first you have to place that where my stop loss will be. The target is just a secondary option. All right, so the target, so target is where we expect price to come. If the trade goes as per analysis, when the price reach our target, we will exit with the profits. All right, and stock split. Do you guys know what is stock split? or it's similar to a dividend, but a stock split is a decision taken by a company to increase the number of outstanding shares in the market. It is done by issuing more shares to current shareholders. Example, in a split of 1 is to 3, the stock price will reduce to one third of a current price, and each shareholder gives two additional shares. So, for example, if a stock, Reliance, they announced at 2018 a stock split, like they want to add more shares to the company. So that time the Reliance shares was uh, at price of 1200 rupees, and during the stock split the price came to 600 rupees. So the people who had shares around to 1200 rupees, they got additional shares at the average price of both the price, like 600 and 112. They got additional shares at 600 rupees. Like if you have two shares at 1200 rupees, you will get extra two shares at 600 rupees, so that the average won't do any more losses. All right, so from that price of 600 rupees, the stock is now at around 2000 something, that of a price. Okay, 2000. Okay, so the Reliance is current price is around 220. All right, so the stock split happened at 1200 rupees, and the split happened at 600 rupees, and then from the stock just moved up. Okay, so if you have hold the stock from 600 rupees, it would have given you more than 2 to 300% return in just 2 years. All right, so moving next, brokers. So as I have shown you, the brokers are basically uh, do, before 2006. Okay, you have to trade stocks physically. You have to go to the BSE or NSE, and you have to tell them I have to buy this stock at this price. If the stocks are available at those price, then only they will give you those shares. Okay, or you have to call a person that I want to buy this shares, and then he will call the brokers in the NSE or BSE, and they will buy shares for you. But now, do the everything is online. Okay, so you can buy and sell shares just sitting at your home. All right, so brokers, um, I use Zerodha. You can also, there are discount brokers like Upstocks, Five Paisa, and premium brokers are basically Angel Broking, Motilal Oswal, Share Khan. Those are premium brokers. Okay, but for intraday, uh, Zerodha and Upstocks are the best. Okay, they give a good amount of margin, and yeah, I like interface of Zerodha. That's why I use more of Zerodha than Upstocks. All right, a company that let you buy and sell shares on a stock exchange in return of a brokerage and commission. Obviously, they are going to charge you brokerage and commission just for that, because they are linked with the main server. Okay, now we'll come to momentum. A stock is said to be in a momentum when it pick up a pace and head in one direction pretty fast. A stock could either be a bullish or a bearish momentum. So I will, what do you mean by momentum? Okay, if you see here at this section, the stock is just heading at one direction. All right, so what I will say, the stock is in a momentum and it's in a uptrend. Okay, uptrend, that means it just going in a one direction. Okay, so that's why we called it as an uptrend. And here if you see, the stock is just going in a one direction, which is in a downtrend, we will say it is a bear market. All right, so this is a bull market, this is a bear market. Okay, so this is a bullish momentum, this is a bearish momentum. All right, we will see more example. Even here, see, this is just a one way direction. This is a bull momentum, this is a bear momentum. All right, and we are always going to trade with momentum. Like we are always going to trade with the trend, not against the trend. All right. Do you guys have any doubt until now? Please tell me. If yes, yes, or no, then no. Any doubt until now? Okay. What about others? Yeah, momentum is basically long term. If you see, this is a 30-minute chart, but if I go on a high time frame like 1 hour or 2 hours, so momentum is long term, not exactly a long term, but it's a short term gain of that particular stock or particular market. Okay, so if I say that Reliance is in a bull momentum, or it's in a bullish trend. Okay, so what I mean is the Reliance is just going up, up and up. Okay, if I say the market is in a bearish trend, that means the market is going down. Okay, so during Corona pandemic, the market was going down, 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 down. So what we mean is the market is in a bearish trend. Okay, so then from December the market was just going up, and during Jan we touched the all-time high. That means we were on a bullish momentum. All right, understood myth. Okay, so yeah, stock charts. What are stock charts? Do you guys uh, know what are stock charts, or have you seen any charts until now of any stocks or any markets? On CNBC, whether they doesn't show stocks, they just tell you the tips, nothing else. Mostly on new business channels, they doesn't show charts like this. These are the candlestick charts. Okay, these things are candlesticks. All right, on mostly uh, news channel, they just show you a line chart. All right. Yeah, it's been a very long time. I haven't seen any business channel. Like I used to watch Z Business. Like Anil Singh used to give good stock tips, especially of index. So me and my friend used to trade based on his tips, like STBT and BTST calls, like buy today, sell tomorrow, and sell today, buy tomorrow, kind of stocks. All right, just a minute, guys. I will be back. All right. So yeah, so the stock price shows price momentum in a relation to time. Okay, so in school, if you have heard about, if you have the during geometry, I guess you were using charts, all right, to draw graphs or statistics and all those stuffs. Okay, so you are familiar with x-axis and y-axis. Are you guys familiar with those terms, x-axis and y-axis? All right. So x-axis basically shows you the time, and y-axis shows you the price of a stock or an index, whatever you can say. All right. So in relation to time, we see price. Okay. So at if you see my cursor is pointing at that price and the time. The time is 1st April 2021, 11:10 a.m. Okay, at that price, the stock was around 1480, 14,835. Okay, so this is how we are going to look at the charts. All right. So the candlestick charts. Okay, so we uh we will understand what is candlesticks. Okay, so candlestick shows you open, low, close, and high value for a particular chosen time period in the stock. We can be used in any time frame like 1 minute, 5 minute, hourly, or daily chart. Used as a modified formula that include value from a previous candle to plot a candle. So this is a complicated point, but it just for understanding what the candles or the what the system does to provide the next candle. Okay, and gives a clear picture of a trend, reversal, and a breakouts. Okay, should be ideally used along with the normal candles and not on its own. All right, so just note this down. What the candlestick shows us: the candlestick shows us the open price, the low, the close, and the high of a particular time. And I'm going to ask Myth. So this is a 15-minute time frame chart. If you see there, this is a time frame. Okay, and according to, if I change this on 30 minutes, so this candle which is forming, so this is a 30-minute candle. Okay, if I go on 10-minute time frame, so every candle which is showing on this particular chart are all based on 10-minute time frame. So this single candle is of a 10-minute time frame. Okay, so I will ask Meet that, see, if you want to see open, high, low, close price of a candle, here up on a top left side corner or a middle, there are values: open, OHLC, open, high, low, and close. I'll place a cursor on a random candle, and Meet, you tell me what is the open, high, low, and close of that particular candle. Just look at it and type. Okay. And the last one is close. Correct. So that means, so after forming this candle, okay, after forming this candle, after forming this candle, the this candle opened at the price of 14,819.5 and made a high of 14,835, and then again made a low of 14,000. That means the low 14,843. Okay. 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 Sorry, I was on the next can. So the open and low uh, prices of that particular candle is almost same. That means the candle just went up and it closed around at this price, which is 14,848.5. Okay. And one more thing. So do you see this long lines on the candles? These lines, what do we call those lines? Anybody? Yeah, this is a 10-minute time frame. You can go on other time frame like 30 minutes, the 30 minutes will show you different data of that particular candle. All right, so if I place my cursor at this candle, and if you see the values up, the open was 14,746, the high was 14,816, the low was 14,725, the close was 14,787. Okay, moving next, do you guys know the water wicks and water bodies of the candles? Yes, yes, no, no. Okay, all right. So if you see, once the candle's forming and the candle close below this price, all right, if I place my cursor, the closing price is 14,872. So the candle closed around this price and made a high of 14,099, sorry, made a high of 14,908, which is this. All right, so this particular line, we called it as wick. All right, and this, the green part, we called it as a body. All right, so this is not just for green candles, also for a red candle. This candle right here opened at price of 14,873, made a low of 14,679, and then made a high of 14,886, then made a low of 14,679. Okay, and closed at the price of 14,800. All right, so this is a candle body, this is a candle wick. Okay, so wicks are can be on the both side. Okay, like this. So if you see, these are the wicks, the middle part is the body. Wick, wick, body. All right, and if you see the candles with no wicks like this, so this candle has very small wick but similar to nothing. All right, if you see this candle, just a body, just a body, that means there is a huge buying or selling happening during that time frame and during this candle. Okay, even here, just a body, just a body with very small wick. All right, huge body with huge wick, just a body, just a body. Okay, so the concept is clear. What are the candlesticks, the high, lows, open, close, and what are the bodies and the wick? Yes, yes, no, no. Okay, only Meet is answering. Where are the others? Are you guys there? Please type yes at least. Vinayak, Dinesh, and you guys are, I guess, Jagan and Dinesh are familiar with all this kind of stuff. Maybe, yeah, cool, cool. No doubt, no problem. So moving next. All right, we are done with candlestick, water candlesticks. Now we will move with candlestick patterns. Okay, so we are going to focus on three candlestick patterns during your analysis. All right, so the first is pin bar candle, second is engulfing candle, and the third one is doji candle. All right, so the pin bar candle. So the pin bar candles are basically there are two types of pin bar candles, which is bullish and bearish. Obviously, the red one is bullish pin bar. The green one is bullish pin bar, and a red one is bearish pin bar. Okay, so bearish pin bar is valid only at a low. Shadows shows rejections from the lower price. Okay, bearish pin bar is valid only at high, shows rejections from the higher price. At any time, the color of a previous candle will not matter. Okay, it doesn't matter what is the color of the previous candle, we just have to see rejections. Okay, we just have to see the wicks of a candle with a small body. Okay, so we will call it as a tail or a wick, depend on how you want to say it. Okay, at any time the color of a previous candle will not matter. What matter for a valid bullish pin bar is that it will occur at a low. I will show you on the charts. All right, if you see, this is a pin bar candle. Okay, this is a pin bar candle with a small body and a huge wick. So why does this wick forms? So wick generally forms because of high buying or selling pressure. Okay, so if you see, the market was trying to go up. Okay, and then it came down. We call it as a retest, but once it came down, this was an important price range, or we called it as a support. All right, once it hit that support, buyers start getting active. Okay, once the buyers start getting active, they will push the price up, and the sellers will start exiting their positions. Okay, so that's why the wicks form. All right, and if even here, this is a kind of a pin bar candle, but we call it as a shooting star, but we are not going to focus that right now. But we are just going to understand what are pin bars, right? So this was a bullish pin bar. Doesn't matter which color the candlestick is, but the main goal is, if you see rejections from below, that means buyers are getting active. If you see rejections from above and the wicks are forming to the upside, that means sellers are more active here. Buyers are more active, buyers are more active, buyers are more active. Bearish pin bar, sellers are more active here. Again, buyers push the price above. All right, buyers push the price above. This is the bullish pin bar, even though it is in a red color. Pin bar, pin bar. Okay, you guys get it? What is pin bar candles? Bullish, bearish. Pin bar candles are generally candlestick patterns which have huge wicks with small body. Okay, now moving next. Engulfing candles. So engulfing candles are also important part of a candlestick patterns. Engulfing candles have a huge body, as I have shown in the uh, previous slide, that the candlestick pattern part, that there was just a body with no wicks. Okay, those are basically engulfing candles, and also they indicates huge buying and selling pressure in that particular time frame or particular price point. Okay, so the body engulfs previous candlestick body. Okay, so engulfing means the next candle which is forming will engulf the previous candles. Okay, so for example, I'm standing in a front of a tall guy. Okay, so that guy literally just engulfed me. Okay, so I can't see above him or I can see through him. Okay, so that guy basically engulfed me. That same psychology you can use for candlestick patterns. If you see any small candles appear, if you see a small candle appeared, okay, and the next candle engulf the previous candle, we call it as an engulfing candle. All right. Okay, so the color of a previous candle also doesn't matter. In a simple word, if you are standing next to an engulfing candle, you should not be able to see the candle behind you. Okay, in such case, it would be an engulfing candle. If a bullish engulfing candle is at a lower, it signals reversal to the upside. All right, I will show you here. So a small candle formed, okay, and this candle engulfs the previous candle. That means this candle broke this candle high, all right. So it engulfs the previous candles, all right. And if you see engulfing candle from the bottom of any chart, like if there is an important support here, we'll discuss what is support and resistance in the further charts. But if you see any important support here, and if you see an engulfing candle forming, then it is a sign of reversal. Reversal means if a stock moves in a one direction and then reverse from that direction, we call it as a reversal. Okay, this is for a bearish trend. See, a bearish trend form, and then if you see this engulfing candle broke its high and it engulfed that previous candle, and also a change in a trend. Okay, if you see any engulfing candle forming on a major support, that means there can be a possible trend reversal. All right. Okay, I just admitted someone who was it. Okay, so there are two types of engulfing candle, obviously bullish and bearish engulfing candle. The one we saw right now was bearish engulfing candle. Okay. Okay, so the bullish engulfing candle, the body engulf previous candlestick body. The color of a previous candle doesn't matter. In simple word, if you stand in the next of an engulfing candle, you should not be able to see be in front of that candle. Okay, in such cases, it will be an engulfing candle. If a bullish engulfing candle is at low, it will signal a reversal upward move. And all the example we saw just right now were a bullish engulfing candle. Okay, a same concept we can apply for a bearish engulfing candle. Okay, here if you see, where are my tools? Here if you see a small candle form, after that a big candle form. So this candle engulfed this previous candle. Okay, so this is a bearish engulfing candle. Okay, why we called it as a bearish engulfing candle? Because this candle broke this candle low. If this candle would have broke this candle high and closed above that high, we will call it as a bullish engulfing candle. But this candle closed below this candle low and engulfed that previous candle. All right. Here a bullish engulfing candle example. This candle broke this candle high, formed it as a bullish engulfing candle, and then there was a trend reversal also. Any trend reversal for bearish engulfing candle? So this can also called as bearish engulfing candle. This candle engulfs this candle low. Even this candle engulfs this candle's low. Did you guys understood the concept of engulfing candle, pin bar candle, bullish, bearish, engulfing pin bar candles? Cool, cool. Same for same even for bearish, a body angles previous candle's body. Color of a previous candle doesn't matter. It's in a simple word, if you stand next to an engulfing candle, you will not be able to see the candles behind you. Okay, that means the candles forming behind that engulfing candle, you won't be able to see those candles. Like for example, this candle can't be able to see the candles forming behind that engulfing candle. Okay, just providing a physical evidence for that candle, nothing else. So in such cases, it will be an engulfing candle. If a bearish engulfing candle form at a high, it signs a reversal downtrend. Okay, if you see this example right here, there was a downtrend and there was a correction. We called it as a pullback. Okay, and then an engulfing candle form that indicates a sign of a reversal. All right, so we are going to use a lot of uh, engulfing candles in our technical analysis. All right, okay, see, even here a bearish engulfing candle. This candle engulfs this previous candle, and it is on a top right now because this was a uptrend. Okay, and this kind of candle forming, which indicates a sign of reversal. That means there is a possible case scenario that the stock can move down like this. Okay, understood, guys? So there was one more candlestick pattern I haven't mentioned in the PPT, but we call it as a dodgy candle. Okay, so dodgy candles look like this. Where is the tool? Okay, dodgy candle look like this. So this is a wick, this is a body. So this is a bearish dodgy. I'll just change the color of both of it. All right. So I'll mark high, low, close. Okay. Same for here. This high, oops, low. Sorry, close, low. Okay. Dodgy candles indicates a sign of uncertainty in the markets. Do you see any body appearing on dodgy candles? There are just huge wick and the body is also small compared to pin bar candle. Okay, even if you see any dodgy candle forming on your charts, that means the buyers and sellers are uncertain that which on which direction the market will move. Okay, so mostly when a doji is formed, the market goes on a sideways trend. Okay, so there are two possible scenarios. If you see dodgy candle, first scenario is no sign of trend. Second is possible trend reversal. Okay, two conditions. So the both buyers and sellers are confused that on which direction the market will move, and the second possible scenario is possible trend reversal. All right, so example of dodgy candle, see this candle right here, it's a dodgy candle. Okay, if you see after that dodgy candle there was a change in a trend. Okay, that's one condition. See, again a dodgy candle, And after the doji candle, there was multiple pin bar candles and small candles. That means both the buyers and sellers are uncertain in the market, like on which direction the market will move. All right. Again, an example of doji candle. Okay, a doji candle, doji candles. These are all the doji candles. Okay, the doji candles indicates both side wicks and a small body in the middle. All right, doji candles. So the candlesticks are clear, guys. The pin bar candles both bullish and bearish, engulfing candle both bullish and bearish, and doji candle doesn't indicate bullish and bearish, though they indicates uncertainty in the market or a possible trend reversal. Yeah, you can also use it for your exit point. So if you are on a buy side, all right, if you are on a buy side, okay, you bought here and your target was fuck, sorry, okay, the stock is moving up, your target is around here, okay, you bought at this price, and once the stock hit it somewhere, the multiple dodgy candles start forming. Okay, so that can be a sign of a reversal or a trend, sorry, a trend reversal, or sorry, a trend reversal, or people are confused, like both buyers and sellers are confused, like on which direction the market will go. Okay, if you see at this current scenario, the market was heading up. Okay, but on a higher time frame, there are multiple wick forming on this candles, like this candle, this candle, this candles. Okay, that means there is an uncertainty in the market. Okay, so there can be a possible trend reversal. It's not necessary that the doji candle should appear 101% for a trend reversal. Like if you go on a higher time frame, you will start seeing doji candles. Okay, so right here, a doji candle formed on 4-hour time frame. On daily time frame, this is a pin bar candle. Okay, that means on a daily time frame, this the whole day of all those noise on 15 minutes or 30 minutes, on a daily time frame, the entire move of that day turns out to be a bearish pin bar candle. So what does bearish pin bar candle indicates? If that pin bar candle form on the high of the market, come on, answer. If you see a bearish pin bar candle with huge wick, small body, what does that indicates? Reversal will happen. Correct, Jagan. All right. Even here, see, on a daily time frame, a dodgy candle form here. So there was an uncertainty in the market. Okay. So that's why it didn't move that much. All right. Yeah, obviously it came down after broke that dodgy candle's low. All right. But still, a dodgy candles indicate uncertainty in the market, or yeah, a change in a trend. All right. Cool. Cool. Anybody had any doubt regarding to candlestick pattern, guys? We'll move to support and resistance. The last myth. These charts are live on market. Yeah. The charts are live on right now. The markets are closed. I am just showing you the candlestick patterns. The fun part will come tomorrow. Today is just a basic part. Yeah, obviously these charts are live during the basic no live market. Right now the market is closed. That's why no charts, no candles have been formed. So during the live market, the candles form like this. I will show you. So this is a futures contract. This is how a chart moves during the live market. So right now it's on a replay mode. That means each candle will form at a particular pace, but during live market each candle formed based on a particular time frame you choose. Okay, so if a 30-minute, if you have choose a 30-minute time frame, it each candle will take 30-minute time frame to form. This is how a live market works. See, a dodgy candle formed here. After a huge uptrend, a downtrend formed, multiple dodgy candles start forming. So what does that mean? What does that mean, guys? If you see multiple dodgy candles, what does that mean? Come on, answer. Yep, market is unclear and possible reversal. Correct. I will play it and we'll see what happens. So if you see, this was an important support for us. All right. And after that, what this candle did to the previous candles, guys? This candle and this candle. What did it do? Correct. Engulfing candle. And what does engulfing candle represent when it form on the major support or resistance? Correct. Correct. Possible trend reversal if it form on a support. That means the market can go up. It forms on a resistance. That means a market can go down. All right, so this is how you have to like take decision during live markets. Okay, each candle represents our entries or exits. Okay, so you have to be fast, quicker. That's why we look more on the candlestick patterns like this. Like if you see multiple doji forming on a major support or resistance, that means there is uncertainty in the market and the market could reverse from that point. If we see engulfing candle forming from those levels, that means also market has a strong buyers or seller signal, or it can reverse from that support or resistance point. Okay, let's play it. See, huge bullish momentum came in that particular candlestick pattern. All right, and even this was an engulfing candle which engulfed the previous candles. All right, see, a huge bullish move again, a huge candle form and a reversal. After that, what is this? Again, one more thing, guys. Remember, if you see candles like this, which are too huge, okay, too huge. So obviously, those are strong buyers and those are strong sellers. Okay, but we are not going to trade looking at the candles. Okay, those can be a possible trend reversal also. Okay, So basically what does it indicates is people are booking their profits at higher price. Okay, the stock started from here and hit a resistance here, and this is the profit booking. Okay, a fresh buying start happening here, and then again the market went up. A huge candle form, it will come for a profit booking, and then again a fresh buy will start. Okay, look at the candlestick size also. If you see a huge candle forming like this, don't trade that candle, leave that candle alone and wait for another breakout or a pullback. Okay, let's play. But after a dodgy candle, there was an uncertainty in the market. Like we don't know where the market will head next. See multiple dodgy forming on that particular price range. Still uncertainty in the market right now. We will again. What happened here? You guys saw what just happened here at this price point, and this is our major resistance. Fast, guys, fast. You have to take decision like this during the live markets. What this red candle just did to this candle. Correct. So which engulfing candle is this? Correct. Bearish engulfing candle. And what does bearish engulfing candle indicates? If it appears on a major resistance, reversal. Correct. And after you have seen there was a fall in the market. All right. So these boxes are basically the support and resistance I have marked. Okay. Again, what just happened here? So this is a kind of a pen bar candle. Okay, after that a bullish pin bar form, and this candle engulfed the previous candle's high. All right, so I'm not going to trade in this region because this is a very small region to trade, but I will either wait for a major breakout. Sorry, let's see what happens. A pin bar candle just formed. Same thing happened here also. See, a pin bar candle formed, after that a green candle formed, and what happened here, this candle engulfed this candle. Okay, and possible trend reversal. And if you see, this is an opening candle of 9:15. What I have said, told you, that if you see candles like this with a huge body, that means, and especially when the market opens, okay, so I'm not going to take a sell entry right away. I'll wait for this move to happen first and then sell from here. Okay, we'll play, see what will happen. If the markets continue going down like this, I'm going to leave that stock for that day until and unless it form a good pattern. See, a dodgy candle forming, that means there is an uncertainty in the market. So we call this pattern as a falling wedge. We will learn more about patterns tomorrow. Okay, See, there was a huge sell off on Reliance Industries that day. So there wasn't any entries on Reliance for that day. I'll wait for it to give a retest about at this point. Only after that I will take a entry on Reliance. A pen bar candle, engulfing candle. All right, went up, went up. Okay, so now it will hit a resistance. Okay, this engulfing candle form. See, as I told, I have to wait for this candle to get filled up, and then only we are going to take an entry. And then it came down. So this was a downward move. This was a retest of a previous resistance, and then it came down. Okay, so this is how we use price action in our trading. So price action doesn't mean only support, resistance, demand, supply zone. Okay, so if you start understanding what the candle is trying to show you, and I mean, once you start following these steps, I mean, nobody uh, can hit your stop loss or any losing trades. Okay, start looking at the candles like this, like look at pin bar candles, look at engulfing candles. Let the chart show you on which direction you have to take trades. So the swing highs and swing lows, we will go deep on this topic tomorrow, but right now just we'll try to understand what is swing highs and swing lows. Okay, a swing high, a high necessarily look like an inverted V or a without the dash. Okay, and it should have one candles that made high and which has not been priced by other candles next to it. And swing low similar but vice versa, a low necessarily look like a V, and exact opposite of a high, how a high looks. Okay, let me show it on a chart. So a stock doesn't move in one direction. Okay, the a stock doesn't move just like this or like this. The stock moves in a waveform like this. So the stock is going up now. So which trend we will call it as a bullish or bearish trend? Okay, bullish trend, right? If the stock is moving down like this, what we will call it? Bearish trend. Correct. So the the stock always form just like candles, high and low. Even the stock forms high and low. So this is the low. This is the high. As you see, the stock went down for a correction. Okay, and then it went up. So what does that means is the stock formed a low again and a high again. Okay, so this high broke this previous high. So We'll consider this high as a higher high. Because why? Because this high is higher than this high. Okay, and we'll consider this low as the higher low. Why? Because sorry, because this low is higher than this low. Again, this high broke the previous high. We will call it as a higher high. This low is above the previous low. We will call it as lower low. So this is basically swing high, swing low, swing high, swing low. Understood? Same with a downtrend, the stock create first high and low. Sorry. So what is this? This high is lower than this high. This high is lower than this high. I will call it as a higher low. Correct me. And now this low is lower than this low. So what we'll call it as lower low. Sorry, we'll call it as lower high. And this is as lower low. Same, this high is lower than this high. We call it as lower high. This low is lower than this low. We call it as lower low. Understand? Understood, guys? So this is during the uptrend. This is during the downtrend. Okay. Dude, guys understood the concept of higher high, higher lows, lower highs, lower lows. These are basically swing highs, swing lows. I need an yes from each and every one of you. Awesome. Now the last and final part for today is support and resistance. So just looking at this word, what do you mean by support and resistance? Oh, no problem. Correct. What is resistance? So the support and resistance have many names. Like we called support as a demand zone, we called resistance as a supply zone. So if you are from a commerce background or a economics background, you could know what are demand and supply. You guys know what is demand and supply. So basically, uh, if if you there is a release of an iPhone, okay, so you know how much demand an iPhone has. Okay, so that's why the iPhone are sell on a higher price than the other flagship phones. Okay, so you can get a good Android phone for the same amount of price you pay for an iPhone. Okay, why the prices are higher for an iPhone? Because the demand for an iPhone is much higher than any other phones. Okay, and if you see any if you know about Poco phones, or uh, those provide a huge a good, क्या बोलते हैं उसको, good flagship features but at a lower price. Yeah, those phones are cheap for a cost. No doubt there is a demand for this phone, but the supply is huge for those phone. Like you can get a mi phone very easily than a iPhone phone, because that those phone sell for a lower price than a flagship phone. Okay, but both provide a good features for their price point. Okay, it's the same with stock market. This is a very important concept to understand. So if a price is going on an uptrend, so when does this lows higher lows form? Okay, so for example, if I throw a ball to the ceiling, okay, the ball will hit the ceiling and the ball will come back to me. And if I take a ball and throw it down to the floor, the ball will bounce up. That means if the stock hit a resistance, sellers start getting active here. Okay, I'll type, there is a T. Okay, this is the supply zone, demand zone. So if a stock reach an unfair high, okay, like if a stock hit a support, sorry, if a stock hit a resistance, a sellers start getting active. That means the stock has hit a particular ceiling. Okay, and to bring a stock at a fair price to buy that particular stock, the stock will go down, take a support, which is our demand zone. Okay, and the stock will move again. Okay, if a stock again hit a supply zone, sellers guys start getting active, then they start booking the profit, or we can short sell also. The stock will move down and again come to the demand zone, the buyers will start getting active. Okay, and then we will buy the stocks. All right, demand zone, supply zone. Same with a downtrend. If a stock going down, hitting support and resistance multiple times, this is our supply zone, this is our demand zone. Supply zone, demand zone. Okay, basic, support, resistance, support, resistance. Now we will see this on a live chart. Okay, the Reliance, I will clear all the drawings. Okay, so what we will call this trend, guys? A bullish trend or a bearish trend, or a downtrend or an uptrend? You can use both the terms, any terms. Bearish, correct. Do you see any higher highs, lower highs forming? First we will mark the high, then we will mark the low. All right, then this high is lower than this high. So what we will call it? Come on guys, fast. Lower high. Now this low is lower than this low. What we will call? Correct. Lower low. Okay. And also now tell me what I am drawing right now. What is this? Why the stock came from here to here? Resistance, support. Okay. Same support. Now see one thing, one terminology you have to remember that. So this is a support for this region. Okay. So the stock broke this support line. So right now, what is this for this stock? So this support become resistance, correct. So this is our resistance now, which was the previous support. Okay. Now the stock is again taking a support. Okay. So again, if the stock breaks the resistance, now we will come here. All right. Which trend is this, guys? Bullish trend, uptrend. Okay. Correct. Will mark the low, will mark the high. So what is this now? This high low is higher than this low. Higher low. This high is higher than this high. Sorry. This is now higher high. Okay. Now I will mark. These are support. These are resistance. Again resistance. Okay. This is support. This is a resistance. So once the stock broke the resistance, what now it became? The resistance become the support. All right. So do you guys understood all the basic concept of stock market, including candlestick patterns, charts, uptrend, downtrend, then uptrend, swing highs, swing lows, higher highs, higher lows, support resistance. If you have any doubts regarding to all this, just ask me right now. The recording will be provided anyway, but still, any doubts? No, no, no. Everything is clear. Cool, cool. Like this is the most important part, especially the candlestick patterns, swing higher highs and higher lows, all those stuff. and support and resistance. Obviously, all the things are important, but this price action we are going to use this for our technical analysis most of the times. Okay, cool then. We'll meet you guys at the same time tomorrow, 1 p.m. And please don't be late, anybody. Okay, so we start little late today around 1:15, but yeah, be here on time exactly at 1 p.m. Okay, I will cool. I will stop the recording right now and exit the meeting. Okay, see you guys tomorrow. Bye bye.